Welcome back. It is Issues at Hand, WBS TV. Peter Kivazo with me, the Commissioner General of URA, Doris Akol. I come to the trade at the border. At what point do... I'll address the specific. Address the issue of the traders that have cars that have stayed in Mombasa for a donkey's age.
Yes, we have a significant pile-up of cargo that has been at Mombasa port for about, the figures I got some time back were about even 10 years. But a long time, let's say a long time. And this is a whole mix of goods. There are those that were imported by people that were not able to clear them out of the port and just needed time. There are those that were imported by people who abandoned them there. Then there are those that were imported by people for some reason, did not clear them for various reasons, were not cleared out. It became an issue between the Kenya Ports Authority, Kenya Revenue Authority and URA, and the clearing fraternity. There have been discussions ongoing, and most recently the agreement has been that the traders, people who have goods at Mombasa port and are willing and able to clear them, have been given a moratorium on all port charges and revenue KRA warehouse charges. They've been given 60 days in which to clear their cargo, to take it out of the port. After that, KRA says, well, we have done our part, we have to clear the port. So I would really appeal to you people that have your cargo stuck at Mombasa. You have an opportunity, 60 days in which to clear your cargo. After that, it becomes very difficult for us, even as URA, to argue on your behalf, because we've really tried our best, and at least we've managed to get a waiver of port charges as well as KRA warehouse rents. So people should be able to clear their goods, those that are willing and are able to.
So effectively it's rested for now. Do it within the 60 days.
Do it within the 60 days, and this is an agreement that was reached even at the last summit.
When was the 60 days? When did the 60 days commence?
It's going to start running from the time an advert is placed out. An advert is going to be placed out in the East African newspaper, and it should be coming anytime soon. So from the time that advert comes out, the 60 days will start counting.
Okay, what does it mean in tax terms? If I've had goods in Mombasa for 4 years, do I still pay the same tax as I should have 4 years ago, or I pay at the current rates in Kampala?
You have to pay possibly at the current rate, because it all depends on when you entered the goods, technical terms really. But if the goods were declared 4 years ago, then perhaps the tax might apply the one of 4 years ago. But if they are being entered now, indeed, if they are being cleared out of the port now, most likely they are going to be entered now, and the tax regime will be the one applicable now.
Right. I'll let go on that and come to the issue of the single customs point.
Yes.
Where are we at?
Single customs territory, as we call it, is 1 year old now. It's covering wet cargo, what we call wet cargo, basically the petroleum products. Also rolled out to categories of dry cargo like cement, sugar, old used clothing. We have alcoholic drinks. We have, I think, electronics as well. So that's the spectrum of goods that the single customs territory is covering. What does this mean? It means that when you import your goods, the entry point into the region is either Mombasa port or Dar es Salaam port. The one that is actually working efficiently right now is the Mombasa port. So the goods are entered at Mombasa port either for clearance to come to the market or for warehousing, or indeed for those going outside the region for transit. And that's what it means. So if the goods are coming into the market, taxes are paid at the point the goods are declared at arrival in Mombasa. Taxes will be paid in Uganda for goods coming to Uganda market. Taxes are paid in Kenya for goods going to Kenya, Rwanda, etc. That's what the single customs territory means.
If I have goods entered in Dar es Salaam,
yes,
I can get them practically paid up and cleared in Dar.
You pay, the payments are made in Uganda if the goods are coming to Uganda. We're still receiving the payments in Uganda. It's not necessary to pay at Dar es Salaam because with IT platforms and everything, we are able to receive, and then Dar and Mombasa are able to see that payment has been made for these goods, and then clearance is given.
So they are straight loaded into the market by
Yes.
any point
Yes.
I arrive.
Yes.
How long will this take to even out the taxes so that the same tax on property, on a product in Tanzania is the same as Kenya, Rwanda, and Uganda? Or is that actually within?
It is already in place, because in the region, and the regional goods that are moving within the region are at zero. That's what the customs union means. That if an exporter in Kenya exports goods to Uganda, there is no import duty of entering those goods into the Ugandan market. The import duty applies for goods that are coming outside of the region, and that's what we call the common external tariff. Goods coming from Pakistan, China, import duty rates have been uniform at 25%. There's a category of goods coming in from the COMESA region, import duties are at 7 or 10% depending on the goods.
I'm doing a frown on this, and I need to say, do you think our people are aware of this? Because I know that the border point in Mutukula has a lot of rice trying to be smuggled in from Tanzania. If it is grown in Tanzania and it attracts no duty, are these people that are trying to smuggle it in aware that actually you're risking for no good reason? You have Blue Band the other side of Kenya, being smuggled over Malaba, trying to find every nook or cranny to get in.
And that is the, call it laughable about smuggling, because sometimes, and I'll come back to Mutukula shortly, people smuggle even goods that have no duty, but they just feel they are smuggling. But, and we've seen this happening even on things like salt and whatnot. But Mutukula has an issue. The rice is actually Pakistan rice.
Oh.
Yes, it is Pakistan rice that is rebagged in Tanzania as if it is Tanzanian rice. And that is where the actual smuggling is.
How would you know?
We are able to tell. We are able to tell.
Because if I bring in the rice into Tanzania, open up the bags, do Tanzanian bags, and bring them to the border.
The rice itself doesn't change.
You don't think that we can grow good rice?
That's not the point I'm making. I think we are able to distinguish between rice grown in Tanzania. We have equipment that is able to tell us that. Yeah.
But I mean, I've seen people smuggling sufrias, saucepans from Tanzania, and I think they are made in Tanzania. I don't know, but I think they are made in Tanzania.
There's not supposed to be any duty on that.
Shouldn't you do a deliberate project on touching base with these people along the borderlines? Because now when you say, I'm thinking, wait a minute, if you did travel by bus from Kenya, there are people bringing in petty things that possibly would attract zero tax on anything, and they are in a hustle to hide them somewhere to do what?
Okay, I must clarify that import duty rates are at zero for
Yes.
goods coming in the region. But there are other taxes like VAT on imports, and then there is also import license commissions and things like those, withholding tax. That tax is collectible even on goods which have a 0% import duty rate. So indeed, maybe in smuggling the sufrias, they're trying to avoid payment of that. But constantly educating people. And also, we have the concept of cross-border trade, especially in those areas that are at the border. Cross-border trade is something that we are encouraging, and we typically don't give people too much stress, to the extent that it is actually cross-border trade. And of course, you're able to tell in thresholds of the quantities that are coming in, whether this is simply cross-border trade or it is actual smuggling. But when you look at the profile of goods that come in, indeed, you find a certain similarity of the goods that are being smuggled.
Okay, before I go back to targets, I need to go to treatment. People doing transport by road and people that fly in through Entebbe, they are treated different. If I came in with the same amount of goods or pieces through the airport at Entebbe, I'll get a smiling URA officer, the guys at customs will say hello, and most likely with the same amount of goods at Entebbe, I'll smoothly sail through it. It's very unlikely that carrying a box or two of the same item in Entebbe will attract as much furor as it will attract in Malaba, Busia, or Bunagana. Is that deliberate?
No, it isn't deliberate, but I would also like, of course, with the further information, what people must know is that when you travel, you're traveling back into the country, you're entitled to $500 of allowance, import duty-free allowance. So the majority of people that come in through the airport are not likely to carry bulk of things that exceed $500. Those that indeed carry that kind of bulk are the kind that go through the goods to declare, and taxes are collected at the airport for that category of people. Now, the people who travel in the buses, most of them are actually involved in trade. They'll go to Kenya, shop stuff, and bring it for sale in Uganda.
They may be still within 500 or below.
I'm not sure. It depends on the different circumstances, but invariably most of them are above the $500 limit, and they are treated accordingly. In terms of the courtesy, maybe that is areas that we need to improve on, and again, these are things that we learn as we go along and see how to improve them.
Right. Viewers, I go to, before I take the break, I go to the issues of getting the tax away from threshold, but getting the bulk of tax higher than what we get today without the population feeling they are being skimmed off. What's your target at per annum now?
This financial year, we are expected to contribute 9,500 billion. I'm rounding it off thereabouts. 9,500 billion, 9.5 trillion shillings.
9.5 against...
the government expenditure for this financial year is estimated about 15 trillion. So URA is expected to contribute 9.5 trillion of that. The rest, of course, is going to come from budget support from our partners. So that's the target.
Looking, because 9.5 trillion is really substantial, but looking beyond this, in 3 years from now, in 4 years from now, do you think that you could actually cover the budget?
It's a possibility. It's a possibility, and that's what's driving us at URA. We must get to a point that we are covering 100% of the budget. However, budget needs also keep expanding. For example, we have the standard gauge railway that's in the pipeline. We have the oil pipeline. So, of course, budgetary requirements keep expanding, but the target is indeed to cover our budget expenses at 100%. That's what's driving us at URA.
Okay.
And I must add that the money is available in the economy for us to be able to do that. We just need to clean up our act and be able to collect it.
I need to get to that. Where is that money? Because as I feel now, you're practically taxing everything there is to tax. So I'm just imagining, okay, if they have to cover this deficit of about 6.5 as at now, where else would you go?
The money is in the significant cash economy that we have as a country. The so-called informal sector is actually the cash economy. The livestock guy that sells 100 cows and takes the money in the bank without thinking that he has to pay tax. The pineapple person in Luwero, the Chikubo people, and other similar trading activities.
Oh.
We've made inroads. We've made inroads, but we expect more compliance. We expect more compliance, and they are really. We've engaged with them, and they're coming on board. But that is what I talk about, the money being there, because we do see a lot of significant activity. Some of the instruments that have helped us get a sneak peek into that are the 50 million and above property sales. If you are able to afford property of 50 million and above, that is disposable income. So for you to be able to have 50 million disposable income invariably means you're above the income tax threshold. So where are you on the income tax register? If you're not there, we help you come on board, and that's really the intention.
Let's deal with money laundering. Any help from URA in dealing with this? You have a fellow that has ripped off a section of URA. They have 100 million, 200 million in their house somewhere. One day they need, quote unquote, to wash it clean and bring it into the banking system. Does URA help in any way? They need to bring in money from abroad that has been got in ways not exactly very clean. They need to get it home into a bank. Where is URA's place in this?
We can't do it on our own, and indeed we are not the frontline institution that fights money laundering. But the Bank of Uganda has put in place certain mechanisms to be able to catch that kind of money. And I think with the establishment of the Financial Intelligence Authority now, we are going to be able to see evidence of that kind of transaction more frequently than before. And once it comes to our attention, of course, we simply put in our fee note and say, if this is money that has come to you, barring any other explanation, it is income on which tax is payable.
I still get that, but if I bought property, you've talked about 50 million.
Yes.
And the money isn't indicated anywhere in income that I have earned. Are there any more questions than please indicate to us the tax returns on this? Or your interest as URA is purely what was the tax that was supposed to be returned on the 500 million that you've used to buy a property that was never declared, and we'll take that home and go home?
Again, depending on the profile of the person, most times at that point, as you register, we expect a payment. We call it a provisional payment of tax, because if you're expending 500 million shillings in purchase of property and you're not on the tax register, then indeed for that year, that financial year, you have earned income. You have earned income. So at the point we register, you will expect you to make a provisional payment. Hopefully at the end of the year, because you know income tax is an annual thing. At the end of the year, you come and file your return and either top up or you get a credit for the provisional that you have made. That's the point at which we try to rope in that kind of income.
Right, viewers, we're going to take a break. When we return from the break, we're going to deal with a bit of technology and tax and whether it is helping. There was a time when URA spoke of, I don't know whether I say the word right, Ascuda. I know it was an animal in the trade industry. And now the online portfolios for taxation. Have they eased the process of administering tax payments, or the process of paying the taxes themselves from the paying side? Don't go away.